Hi, and welcome to Random Rogers Big Picture for the week of December 2nd. November's over. It was kind of a rough month for a lot of different asset classes. Strong finish to the month, to be sure. We've got a few different things on the agenda this week. First up, whether or not this is a bull market rally or a dead cat bounce within a bear, is the bull still intact? I've been writing for a while what my thoughts are. If it is a dead cat bounce, and in every post I've conceded that I might be wrong about it being a bear market, if it's a dead cat bounce, it is a very typical one. It looks like every other, I won't say every other, but a lot of previous cycles like this. So that's important to me. The other thing to keep in mind is you're going to hear, if you do a lot of reading, watch a lot of television, you hear compelling arguments on both sides. Now, one thing to keep in mind is, as you hear about different indicators thrown out at you, is that the market goes up 72% of the time. So that's going to naturally skew most data points or most indicators or what have you. That's something to kind of take with a grain of salt, kind of how these things work as you try and sort out for yourself what this is. You shouldn't listen to me because I think it's a bear market. You need to make your own way. This is about sharing the way I look at things, and as I've said a bunch of times, maybe you take a little from me and a little from a bunch of other people and you weave together your own plan and your own strategy about how to navigate. To the extent that I do think that this bear market has started, right now I am, by the vast majority, I am long and invested in the market, but I have taken some steps such that the effect of the portfolio is on days that we're up a lot, I underperform, and on days where we're down a lot, I outperform. So by definition, less upside, less downside, by definition, I've reduced volatility. That's kind of the goal. As I think we're end of cycle, you've got a lot of things that, you're seeing volatility in a lot of the hot parts of the market. This is a point that came up on the tube on Friday. You're seeing a lot of hot parts of the market, get more volatile. They've rolled over and gone down a lot. Had great little run this week, to be sure. Things like financials had a great run, especially on Friday. So these are all things that you kind of need to weigh out for yourself. It leads me still to conclude bearish, and if I'm wrong, I'll make changes, but I don't see the need, since I'm lagging the upsides, I'm not missing it. Crucial distinction in my world. Monday and Tuesday and Wednesday, the Super Bowl of indexing. I got a free ticket to go, so I'm going to go check it out, see what's what. If there's anything you want me to say to anybody, leave it in the comments. I'm going to ask for more fixed income products, more buy-right products, and see if I can figure out what's new in the world of, I think with ETNs is where there's going to be more room for innovation, only because when a bank promises that it's going to replicate an index and they don't have to own anything, it's just their promise, say for the bank going under, assuming nothing dramatic like that, it does become easier for them to do when it's just their word. And generally speaking, I have faith in that, even if some other folks do not. And what else? I mentioned the other day about having done some legwork and maybe have found 7 stocks to consider rotating into as the cycle ends, or if I need to re-equitize, or what have you. I should say as the cycle begins, and if I need to re-equitize. Well, a client who is a regular on the blog emailed me and asked me for the names, and I shared them with him, and I think I sent him probably 9 or 10 names, and in doing this I realized I probably have more like 12 or 13 names that I've kind of learned the story on. Point of bringing this up is, whether you're right or wrong about anything, you need to, in the past, you need to look forward. As I think I'll be able to reveal in about a month, this was a pretty good year for me. And once that year is over, big deal. What matters is in the future, is again being right and wrong about a bunch of things. They blend together to give you the final result. So once this year is in the book, whether things stay exactly the way they are, get better or get worse, once the year is over, I then need to think about the next year. If we don't see a start of a bear market right in here, okay, what do I do from there? If you're in the same camp, and I've had a lot of people leave comments that they've got a lot of cash raised. I don't know what they mean by a lot, but if you really have a lot and the market whizzes higher, that potentially becomes problematic. What are you going to do if you've got a lot of cash and that has turned out to be the wrong thing? At this point, I disclosed it the other day. I think I'm in the neighborhood of 15% cash, something like that. A bunch of dividends hit, so it may be inched up just a hair, but about 15% cash in generic terms, very generic, which is not a lot. If you're 40% cash, to me that is a lot, or 30% cash, that's a big bogey to overcome. But what are you going to do? And if you exactly nailed this year, if you're up, a lot versus the market, and you've traded every twist and turn correctly, the way several commenters on the blog have done, well, that's great. Put it in the book. What are you going to do next year? 2007 won't matter once 2008 gets up and running. And that's kind of, to me, what's so interesting and exciting about being involved with the markets is, success, great, move on. Failure, too bad, move on to the next go-around. And I'm serious about the Super Bowl of indexing. If you want me to say something to, they're all going to be there. This is a big one, apparently. They're all going to be there. If you want me to say something to them and it's not asinine, leave the comment and I will mention it to whoever it is you want me to mention it to. That's about it. A lot of championship NCAA football this weekend. Have a good weekend.